This video, we're going to talk about how Kamala Harris's tax plan on real estate will single-handedly destroy affordable housing. Guys, this isn't a political video, and frankly, I don't even like politics. I don't like to take sides, and I think everybody's full of crap, generally and specifically. This is something I want to talk about because it affects real estate investors. And there's some misinformation out there. So part of the Harris plan for taxes is to tax what's called unrealized gains. So the idea is that the tax would be 25% of unrealized gains. So basically, if I bought a property for $100,000 and a year later that property was worth $125,000, worth is the key thing here, what is worth, then I would have a 25% tax on that, and I would end up paying $5,000 in taxes on what's called unrealized gains. The problem is I haven't gotten $125,000, and the next year, what if the property goes down to $80,000? Then I'm upside down. So then do I get a $60,000, $55,000 refund from the IRS because of that? No, it's not going to happen. So what happens is this would have to be built into the cost of housing if this tax happened, which would increase the amount of rent someone would have to pay. Because as a real estate owner, I don't magically get 25% of the gains in my pocket. That's why it's called unrealized. It's unrealized because it's not a profit to me until I actually take all of the costs into account. So if I bought it for $100,000, but I spent $20,000 in repairs and I end up selling it for $125,000, let's say, there's a $5,000 gain here is what I'm talking about, okay? And so that's my actual realized gain because I've actually sold the property. The other problem that you really run into with this is how do you determine value? I talked about this a lot. I'm saying, hey, what is worth? What is worth? Who determines worth? Is worth an appraisal? Is worth an opinion? Is worth, what determines worth? Well, we know what determines worth, and it's a willing, ready, and able buyer and a seller is really what determines worth, because those two, unless there's coercion, come up with what the value really is as they negotiate, and that's what determines worth. So what we're basically saying is, if you are taking something and estimating what it might be worth and taxing that at 25% per year over those years until you actually sell the property, this is a disaster waiting to happen. And this is why, okay? And this isn't about, give money to the rich type of idea. There is a lot of people saying, hey, this only applies to the rich, so it doesn't have an impact on most people. And the way I understand this is that's true. It's only for people that have a really high net worth, I don't know, around $100 million net worth, okay? But this is what most people aren't realizing. So they're not talking about that. But it's $100 million net worth are the people that own apartment complexes. They're the ones that can go buy 100 units, 200 units, 500 units. These are the people that are providing the affordable housing in this country. And if they get taxed, what's going to happen is they will have to increase their rents to cover the cost of the unrealized gain and put that into their rents in order for them to pay for it. There's no way they can come up with money to pay for unrealized gains on all these properties. This will de-incentivize investors coming in and buying affordable housing. It will also increase the price of rents because where does the money come from? I haven't sold the property. I don't have all this money to pay 25% every single year of the unrealized gains. So if I'm an investor and I have $100 million net worth, I am providing a lot of affordable housing in this country. And now with the Harris plan, I will have to increase my rents in order to pay the unrealized gains, which will then destroy affordable housing in this country. The other option for real estate investors are to sell the properties. But if they sell the properties, they're going to have to sell it to somebody that's going to be willing to pay an unrealized gain, which will lower the value of the property potentially. And then you're going to have somebody that is not interested in providing that type of housing. They might convert it into something else, some other type of property or structure. As we talk about this Harris tax plan, one of the things most people just don't understand is that the proposal is it's only for people that have $100 million plus. Now, for most of us, that may seem like an awful lot of money. However, when you look at affordable housing or apartment complexes, you could spend $25 million on one property. Also, depends on how they count their net worth, because if they count the net worth on unrealized gains, you could have somebody that owns a couple of apartment complexes that is automatically worth $100 million. And then you would be taxing 25% of the unrealized increase. The problem with this is, where does the money come from? If I own this $25 million and I've got debt on it and I'm paying it and I'm providing this affordable housing for people, which is one of the things the country really needs, and I get hit with a 25% tax, let's just say the value of the property went up $10 million, so I have to pay $2.5 million in tax on money that I have not yet received because I haven't sold the property, haven't liquidated the property. How am I gonna come up with that money? Where do I get it? I don't have the money. I quote unquote have a paper worth of $100 million. Well, guess what? I'm gonna have to take this 2.5, I'm gonna have to divide that by 12 months, and then divide that by, let's say there's 500 people here, and all of a sudden I'm having to raise rents because of taxes, because there's no other way for me to pay for this. I'm raising rents in this hypothetical example, 2.5 million divided by 12 divided by 500, and I'm raising rents on each one of these, this 500 unit complex, I'm raising rents by $416 a month. Now, most of the affordable housing is somewhere around $1,000 a month. I've literally increased by 41%, and I've got to do that year after year after year. Now, what happens if my gain is $20 million because real estate values go up a lot, supposedly? I don't know how they measure that because the property's not being sold. So it goes up 20 million. Well, guess what? Now rents are going up $832 a month, which would kind of stink if your rent was $800 a month, that your rent actually has to double. This is what I don't understand. It's kind of like if I went and planted a bunch of trees and I was planning on having a harvest, some type of a crop. Well, let's say that the crop comes up once every few years. So I've got to plant a tree, I've got to nourish it, I've got to put fertilizer down, I've got to take care of it, I've got to invest all this money, and down the road in a few years, that's when I actually get the fruit, and that's when I can sell it, and that's when I pay for this whole thing that I've done. That's why I've taken on the risk, is the potential reward for that. Well, what if I got taxed every single year and they say, hey, your fruit is starting to blossom, so you owe 25% of what we think you'll be able to sell all your fruit for because it's starting to blossom. Okay, your fruits are starting to develop and they're the size of a pea. Great, you tax another 25%. The cash does not make sense. There is not cash flow enough to establish that, especially when there's no income coming in, which is why this whole thing is about being taxed on income, not being taxed on phantom income or unrealized gains. If it's an unrealized gain, it's not a gain. There's no money there. There's no way where that money comes from. And saying this only applies to the mega rich is completely false. Most people that would be determined in this mega rich probably own multiple apartment complexes, and they have a net worth of a high amount, but that doesn't mean they've got hundreds of millions of dollars. They might have a lot of equity. They've inherited the property, they've gotten it, they've purchased it, whatever the case is, but that doesn't mean that they're flying around on private jets and on super yachts. What it means is they have a paper net worth. And what it also means is the only way they can come up with the money to pay for that is by increasing rents, which will increase the amount of affordable housing affordable housing basically goes away because of the increase on the tax of unrealized gains, which aren't even gains. Okay, let's just use this property as an example. I just pulled this up at random. This property is $39,500,000. Okay, there's 403 units. So typically, when somebody is buying something like this, they want to be looking at a cap rate, capitalization rate of around, let's just call it 7%, maybe a little higher, maybe a little lower. Now, for this to have a cap rate of 7%, which means an investor that comes in and purchases it is getting a 7% return on money, regardless of how financing works out. That means the monthly rents on this would need to be somewhere around $230,000 a month is what the rents would be. Now, if I divide that by 403 units, that means the average rent per month is $570 a month, okay? So is this affordable housing? Yeah, this is affordable housing. Now, some are 2 bedrooms, some are 4 bedrooms, some are 1 bedroom. So yes, we're generalizing this, but get you an idea. But we're basically saying average unit is a rent of 570. Now, let's say that property values go up and the idea of unrealized gains or unrealized value goes up to 50 million. So it goes from the 40 million to the 50 million. So there's a $10 million gain. Okay. If there's a $10 million gain, according to the Harris plan, there would be a tax of 25%, which would be $2.5 million that would be paid that this owner would have to come up with. So what they would do is they would take the 2.5 million, they would divide that by 12 months. So that would be 208 a month. Divide that by 403 units. It would be 516. So essentially the rent has gone from 570, where it was in a fair market economy when you're not taxed on something you don't get, which is the whole idea of tax, is it's gains, not phantom gains, unrealized gains. But rents would go from 570 plus the 516, and so rents would be 1,086 a month. That would be the increase. Now you're saying, well, maybe it's not going to go up 10 million. Okay, let's say it goes up 5 million. Now you're talking about $780 a month. You're still talking about a massive increase. Let's see what this is. We got 570 divided by 0.86. Whoops. 570 divided by 1086 equals, that's a 52% increase. That's massive. This completely destroys the ability to offer affordable housing. And I don't care if you're a 100 millionaire. It doesn't matter. It does not matter, because this is what's going to destroy it, is this unrealized gain. This is not something that is going to help this country in any way, shape, or form.